So I have a very unpopular opinion about this topic. Everyone is talking about the interest rates. Back in 2022, when I did a report about the interest rates and what I thought was going to happen, I said,
interest rates are not getting any better. I would be shocked if they don't go up again in December, and I would be shocked if they don't again go up in the first quarter of the year. So they're not getting any better. The rate could actually save you money, and hear me out.
The thing that it'll do is it will provide you with a buffer. So what you do is you buy a home that you can afford now, and then when interest rates go back down, you refi that house at the lower interest rate. But since you didn't buy the home in the top part of your price range, you're gonna be able to pick up equity when those rates start to drop. Hi, I'm Candy Valentino, and for the last 25 years, I've been building businesses and generating wealth, starting my first business when I was just 19. Since then, I've gone on to build, scale, acquire, and exit businesses, all while investing in real estate and building financial freedom. Now it's all about you and why we're bringing you the real story behind building businesses and generating wealth here at the Candy Valentino Show. Hey everyone, welcome back to the Candy Valentino Show. Thanks so much for tuning in with me today. Today in this episode, we're gonna dive into some of the questions from you, our viewers. So let's get started. All right, question one, Kathy from Savannah wants to know why someone would want to put their assets in a trust. This is a great question. Trusts are generally thought of for only the rich, but they are a very customizable vehicle that anyone can leverage depending on your goals. Let's break them down quickly at what they are. So trusts fall into two categories, irrevocable or revocable. People say them different ways. The meaning is the same. A revocable trust is a living trust where you still have control of your assets. An irrevocable trust is where you put in a trustee and now you no longer have control. Those are the two main distinctions. There are different reasons that people would want to use either one, but there are 5 main reasons that people want to think about potentially using a trust. Number one, depending on the state that you're in, you can avoid probate, which can be pretty costly and lengthy upon your death. Number two, it can really provide a lot of tax benefits. 3, it can give you legal protection from your assets against creditors and debt. 4, it'll give you some privacy for your assets, so it's not all over everywhere in the paper, everything that you own. 5, it has some benefits that could even possibly extend beyond a death benefit, like maybe illness or disability, or if you're leaving assets to a minor or somebody with special needs. There are a lot of different reasons that people would want to use a trust. What it's important is to know that state by state, all of the trust rules are different. So you want to talk with an experienced estate attorney in your state. Let them know what your goals are, what you're looking to achieve with a trust so that they can set it up accordingly. Now, I always like to touch on a charitable remainder trust because if you've read my book or heard me talk, I typically mention this. So what is this and who would actually use it? Well, in short, a charitable remainder trust is an irrevocable trust and it has some tax-exempt benefits. It's designed to reduce taxable income of the trust for a very specific period of time. And then upon your death, the remaining assets or property that's in the trust gets passed to a 501c3 nonprofit charity. The number one goal of something like this would be to reduce your taxable income now. So in order to make this actually legit, you have to first donate those assets inside of the trust, any of the property. And then as we covered in the irrevocable trust, you lose control and ownership of that property personally, and the trust now owns that property. The trust then has the ability to disperse funds to the beneficiary, and then after a certain amount of time or upon your death, those assets are then passed to charity. A charitable remainder trust is really great for someone who maybe doesn't have kids or a lot of family and is planning to donate a large portion of their estate or all of their estate to charity anyways. So I hope this answers your question. It's really important that you work with a trust attorney and a state attorney in your state to make sure that they're experienced and they really get to understand what goals that you have and why you want to leverage a trust. All right, that brings us to our second question. We have Joseph from New York who wants to know if it's a good time to buy a home right now. All right, so I have a very unpopular opinion about this topic. If it is a good time for your financial situation and in your family to buy a home, that needs to be the number one indicator of you deciding if you buy a home. Because let's be real, There is nothing that happens in the country's economy that is more important than what happens in your own personal economy. So if it makes sense for you and your family to buy a home because of what's going on in your business or your personal finances, then you would still want to do this. Here's the interesting thing. Everyone is talking about the interest rates. Back in 2022, when I did a report about the interest rates and what I thought was going to happen, I said, we have this on tape, November 2022, that this is the best time to buy a house in the next several years because interest rates are not going to get better. The thing that it'll do is it will provide you with a buffer. Because here's what I see people make this mistake in buying a home. They will go to the bank and say, hey, Mr. Banker, what's the most amount of house that I can buy with my total taxable income that me and my family collect? They will tell you, okay, you can afford a $500,000 home. Well, people will then go out and they'll put the least amount of money down to buy that top home in their top of their price point of what they can afford. So let's say you went out prior to the interest rates going up and you bought a $500,000 home at a 3% interest rate. That monthly payment would be around $2,100. Now, if you fast forward to today, which as of now, they're about 8%, but some you can get in the mid to low sevens, you're only going to be buying a $278,000 home for that interest rate that we have now for the same monthly payment of $2,100. Here's why it's valuable. When the interest rates drop, which as we look at all of the data over the history of our economy and how interest rates work in our country, in America, you'll see that there's always an ebb and flow. Do we think they're ever going to get down to 3% again? Probably not. But are they going to come off of the height? Probably so. So what you do is you buy a home that you can afford now, and then when interest rates go back down, you refi that house at the lower interest rate. But since you didn't buy the home in the top part of your price range, you're going to be able to pick up equity when those rates start to drop. But I always go back to this. If it is the right time for you and your family to buy a home, if you have enough cash saved up, if you have enough income to pay for that home, then you always want to go ahead and buy when it's right for you. Don't worry about what's going on in the market because there will always be ebbs and flows. If you're going to be staying in that home for 10, 15, 20 years or forever, any pullback that you see in that house price will eventually rebound and still go up prior to when you're looking to sell decades down the road. This is a great, great question. And of course, it always depends too on what your personal economy is doing in your life and in your family of how I would answer this. But this is a very general overview of why I think that anytime that it's right for you to buy a house, buy the house so that you can always refi later. All right, number 3, Lisa from Miami, one of my favorite places, is thinking about retirement in the next 5 years. What should she put on her checklist before retiring? Obviously, I don't have detailed specifics about your exact situation, so I can't give you really good advice, but I can tell you this. There are 3 things you should really be doing when you're looking at retiring, whether it's 2 years or 10 years down the road. Number 1, do your research. Making smart retirement decisions will give you more retirement security. Invest time to really learn your options, understand how you can improve your security in retirement, and then learn all about Social Security claiming and choosing the right Medicare option, which is like a degree to figure out on its own, and all of your investment balances, as well as any tax implications on those investment balances so that you understand the role of guaranteed lifetime income. Number 2, I always say you got to run the numbers. Don't give up a long-term job before you know what's next and that you can afford it. There's a lot of studies done, including one from Bankrate, that said 58% of baby boomers said they didn't even know how much money they needed for retirement. So giving up a career often means giving up not just income, but additional retirement benefits and even health insurance. So if you find out, say you quit and you're like, okay, I'm going to retire. And then later you find out that you miss your job or you're bored or you would rather go back to your career, or the worst, that you miscalculated how much money you actually need. Finding a position at the same wages starting over again at an older age is typically a lot harder. So always make sure that you really evaluate. And then number 3 is reevaluate, right? We're going to evaluate, we're going to research, and then we want to reevaluate because there's really 3 main levers that have the most impact on retirement security. The first is age. Social Security claiming age and your lifestyle in retirement, aka the amount that you spend and are used to spending now, will really play a big role. A study from Stanford Longevity found that 3 months just 3 months of additional working with creating earned income generates the same increase in retirement income as saving 1 percentage point for 30 years. So if that doesn't say maybe consider keep working, I don't know what does. I would also say this. If you're thinking of retiring, but you're not 100% sure if you are going to miss your job or you have enough money, maybe take a little sabbatical. Take a month off. Consider changing your role in your company. Maybe take less hours or less income, have less stress, but keep working. It's something to consider if it's an option before you just go ahead and rip the Band-Aid off and fully retire, and then later figure out that you want to still be working. Okay, the second lever is Social Security. Now, I'm sure that you've heard the advice that deferring Social Security will improve your retirement security. And that's because there's about 67%, 2/3 of retirees get more than half of their retirement income from Social Security. So if you don't have at least 2 to 3 million in your private investment accounts, Social Security claiming decision will be the most important retirement decision that you'll make. An individual with the full retirement age of 66 will receive 76% more by claiming at the age of 70 instead of claiming early at the age of 62. So just remember that this is a really important key decision that you'll make. And then 3, your lifestyle really matters. This is so different for Lisa in Miami to maybe Joseph in New York or some of the other people that wrote questions in. What is your lifestyle like? Can you reduce spending now and after you retire so that your money lasts a little longer? If you do this the right way, you don't have to destroy that lifestyle. But how do you do that now? Well, let's break that down. There's a few things you can do. Becoming a better shopper now, saving on taxes now, increasing your earnings now, and even consider moving somewhere where the taxes or the overall cost of living is lower. There's a lot of things you can do now in order to set yourself up for successful retirement later. Okay, guys, these were great questions. Thanks so much for sending them in. That's all for today's episode on the Candy Valentino Show. If you found value in this episode, please drop a comment, a thumbs up, an emoji, whatever you're feeling. Subscribe to the show. And if you have a question, you can always send one over. We're going to be doing these consistently every single month. Don't forget to subscribe here on YouTube or Apple Podcasts, wherever you are listening or watching, so that you can stay up to date with all of the new value that we drop. That's all for today. Thanks so much for tuning in with me. We'll see you next time.